On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Hi team, hope you're all well. I trust everyone had a great week. Let's talk about what happened across financial markets, then let's turn our attention to what is coming up in the week ahead. Last week was a good one for global share markets. Most of them were up solidly. The S&P 500 in the US rose 1.7%. UK shares were stronger still, adding 2.5%. Europe was up more modestly, but still up 0.6% up. And emerging market equities were marginally higher, up 0.2%. The Japanese market was one of the few that fell. It was down 0.6%. Closer to home, the Aussie market, the ASX 200 gained 1.3%, and the local market, the NZX 50 index, had its best week in 4 months. It rallied 2.8% for the week. That seemed to come on the back of a positive trading update at the annual meeting from A2 Milk, and that stock finished the week up nearly 18%. Lots of other companies also had solid gains over the week, notably Fisher & Paykel Healthcare too. That one's important because it's the biggest stock on our market, so when it rises it tends to drag the market up, and FPH was up 4.1% last week. It's got a result coming up this week, so we'll talk about that shortly. I think the market also looking ahead to the Reserve Bank meeting, which is this week, so maybe that just helped with the optimism across the local share market. US interest rates little moved. The 10-year Treasury yield slipped back a bit from 4.44 to 4.4%, so not much of a change there. Markets are looking ahead to the upcoming Federal Reserve meeting in December, and that's seen as a pretty close call, pretty much a coin flip in terms of the odds between another cut or a pause. So that's something that is on investors' minds, and that does tend to impact interest rates. Locally, our interest rates fell back as well, market interest rates that is. The 5-year swap rate was down from just over 4% to just below 3.9%. Looking back at some of the key events and key releases, here in New Zealand we did have the results of another global dairy trade auction, so the latest GDT figures. Prices rose another 1.9%, so that's a very solid gain. That was driven by a 3.2% increase in whole milk powder. Prices now up about 21% this year, or just shy of 21%, so they're at the highest levels since the middle of 2022. And Fonterra has increased its milk price forecast, so for the 2024-2025 season, we had a midpoint of $9. Now we've got a midpoint of $9.50. That would make for the highest of all time, and it would beat that previous record from 3 years ago of $9.30. So that's very solid, and I think that lower currency that we're seeing in terms of the Kiwi dollar versus the US dollar, that is helping matters as well. So good news coming out of the dairy sector for New Zealand at the moment. Internationally, the key thing I was watching were the flash PMIs for November. PMI stands for Purchasing Managers Index. These are essentially activity indicators. Bit of a mixed bag, to be honest. What they told us is that the US economy is still looking very solid, but that elsewhere we're starting to see a bit of weakness emerging. So the US flash PMI, and these are composite PMIs, so they cover both the manufacturing sector and the services sector. In the case of the US and most other places, the services sector is much stronger than the manufacturing sector. But these figures that I'll quote cover both. So the US flash PMI rose to 55.3. That's easily above the break-even level, which is 50. And that's actually the highest that we've seen in 31 months, so very strong. Firms were buoyed by the prospect of lower interest rates, improving economic activity, and more supportive policy settings from the incoming administration in 2025. So this is really the first release that we've seen that picks up some of that change, some of that sentiment post the election. So obviously most businesses over in the US are looking ahead to next year and thinking, well, the new regime might be a bit more friendly to us in terms of policy settings and so forth. New orders in the US picked up sharply, registered the strongest upturn in business inflows since early 2022. Again, that was driven by the services sector. And another piece of good news was that the rate of inflation cooled to the lowest that we've seen since mid-2020. So not bad at all, a very positive backdrop based on this survey from the US economy, and that's good for the share market. However, the picture elsewhere was much less encouraging. Europe, Australia and the UK all saw their PMIs fall below that 50 break-even level, so it's not looking terrible in those places, but we are seeing a bit of a moderation, and those PMIs are at the weakest levels in 10 to 12 months. Japan as well continue to look fairly stagnant. We'll get the corresponding figures for China and emerging markets over the next couple of weeks. Right, what should we look at in the week ahead? Well, for a start, it will be a holiday shortened week in the US. Markets will be closed on Thursday for Thanksgiving, and then we'll get an early close on Friday. Markets close at, I think, 1 p.m. on Friday, but it'll be pretty quiet. You know, you only got a half day on Friday, so I suspect a lot of people will take that day off, and there won't be a whole lot going on. So it'll definitely be a shorter, quieter week in the US. That's also Black Friday, which kicks off the holiday shopping season. So this is an important seasonal milestone in terms of it being the start of that crucial shopping period as we head into Christmas. Before the holiday, on Thursday in the US, we will get some important data releases. On Wednesday, the latest PCE inflation report is due. PCE stands for Personal Consumption Expenditures, and this is one of the Federal Reserve's preferred inflation measures. So this is out on Wednesday, a little bit earlier than usual because of the holidays, and it could be one of the highlights of the week. As I said at the start, we've got that final Federal Reserve meeting coming up in December, final one for this year that is, and markets do see it as a bit of a 50-50 call, whether the Fed cuts again, like they have the last two meetings, or whether they just pause and then continue cutting next year. So this is one of the key events that we will see between now and the end of the year, the Fed meeting that is, and every data point from here on makes a difference. And this will be one of them, probably not the most important one. Personally, I think it'll be that December 6 jobs report that is most important for what the Fed does. But the PCE report for October is still important, out on Wednesday. Markets are expecting annual headline PCE inflation to rise to 2.3% per annum, and the core PCE inflation rate increased to 2.8% per annum. That would actually be the highest since April. So you are just starting to see a little bit of an uptick in inflation after a long period of decline, but we're still in the twos, so no need to panic just yet, although this will still get plenty of attention, and the Fed will absolutely be keeping an eye on where these figures go. Here in New Zealand, it will obviously be a very, very busy week, and the key event for us will be the Reserve Bank decision on Wednesday. So we'll get an official cash rate decision, and we'll get a new monetary policy statement, a new MPS. So you'll get all of that released at 2 o'clock, both the OCR decision and the statement, which will have all the new forecasts, and they'll be just as important. And then we'll get a press conference with Adrian Orr and his team at 3 o'clock. So it's all go on Wednesday afternoon. Now, the Reserve Bank has cut the OCR twice this cycle, once in August and again in October, and it was that October one that was the big one, that was the 50 basis point cut. So at the moment, you've got an OCR of 4.75%, the lowest in more than 18 months. This week, we're expecting another 50 basis point cut. So that would take the OCR down to 4.25%. Now, it's not a given. You can actually build a case for a cut higher than that, or lower than that. The case for a 75 would be that there's almost a 3-month layoff after this meeting until the RBNZ next meets. They don't meet until February, so it's almost 3 months. So some people would say, well, you've still got rates at quite a restrictive level. You want to get back to something that looks more like neutral, which is maybe 3.5%. Then you're going to have an extended holiday or an extended break over the summer. I'm sure they'll be working hard, but there's no meeting. So there is a case for doing a little bit more now to make up for the fact that you have that break over the summer. And there's a case for a 25 as well. You don't need to move super quickly. We actually have seen some positive developments lately. You've got signs of life in the housing market. You've got business confidence that has hit a 10-year high. You've got a dairy payout that is likely to be $9.50, possibly $10, the highest of all time. You've got the Kiwi dollar that's now down below 59 US cents, which not only puts upward pressure on imported inflation, but it gives a big shot in the arm to the export sector. So I think you can make a case for a 75 or a 25. I still very much think it'll be a 50 though, and the market does too. So that's what we're expecting. We're expecting it to come down to 4.25%. Now, what will that do for mortgage rates? I think it will have an impact on the floating rate and those shorter terms. Whether it has a huge impact on the 2, 3, and 5-year rates, I'm not so sure. I did record an episode on this and I wrote a report on this last week. So if you're thinking about the OCR, what might it mean for your mortgage? What should you be thinking about in terms of fixing or floating, or how long you fix for, or when you do that, go back and dig that out and have a listen, because that's something we've had a lot of questions about. So hopefully maybe that sheds some light on some of those issues. Anyway, so 50 basis point cut, that's what we're expecting from the Reserve Bank. I think the forecasts will be just as important. The last forecast set came in August, and it feels like a lot has changed since August. So we did have, we've had all of those things that I mentioned in terms of signs of life across the housing market, and the dairy payouts changed. You've had Trump be elected. You've had the currency weaken. You had some unemployment figures that weren't as bad as the Reserve Bank expected in terms of the unemployment rate, but that was largely because of the participation rate falling. So it was kind of a mixed bag. It was good and bad, depending on your perspective. So there are lots of things that will need to be updated, and I suspect we will see some changes in the Reserve Bank's forecast. And that will be interesting because the last one, the August one, that had the OCR settling at 3%. This is the Reserve Bank projections, 3%, but not until late 2026 or early 2027. So that's sort of 2 years away. Now, economists and financial markets expect it to fall much more quickly than that. They expect it to come down to that level roughly in a year's time. However, there is still plenty of debate as to how low it eventually goes. There are some people that think it might not go all the way back to 3%. It might settle a little bit higher than that, 3.25%, 3.5%, maybe even 4%. We don't know. It all depends how things play out over the next little while, and where inflation goes, and how some of those global issues impact us, and how quickly we respond and recover as the OCR comes down, which it already is. So these forecasts will be really interesting. After we see what they've actually done with the OCR this week, I think we'll all be headed straight for that spreadsheet to see where the OCR path goes over the next 12, 24 months. We'll also get a fresh update on business sentiment here in New Zealand, so it won't just be the OCR decision that is in focus. That's on Wednesday afternoon, but then on Thursday afternoon, I think it is 1 o'clock, we will get the latest ANZ Business Outlook. This will cover the month of November. And in October, it looked very strong. We saw headline confidence rise to the highest since 2014. Own activity also pushed up to a 10-year high. Manufacturing, agriculture looking pretty good. Less positively, there were some signs of quite sticky inflation. The net proportion of firms saying that they intend to raise their prices over the coming 3 months increased to 44.2%. That was the highest we'd seen in 6 months, and it was the 4th monthly rise in a row. So that's something we've got to watch closely, and I'll be watching to see whether it goes up again or whether it stabilises or falls. Also on the local calendar, we will have retail sales for the third quarter on Monday, so that will kick the week off. And there are a lot of corporate releases. We've got Fisher & Paykel Healthcare, as I mentioned right at the beginning. That's our biggest stock on our market. They will report their result on Thursday. That will be really interesting. Ryman Healthcare also on Thursday. Earlier in the week, we've got Kiwi Property on Monday, Turner's on Monday as well, Pacific Edge on Tuesday. So lots to keep an eye on in terms of corporate releases. Across the Tasman, there's some inflation figures we'll probably want to keep an eye on. The monthly CPI indicator for October is out on Wednesday. Now, a month ago, it was sitting at 2.1% per annum, but I think you might see an uptick to maybe 2.3, 2.4 for October. So that's something we'll be watching. Not a whole lot on the corporate front coming out of Australia. Ramsay Healthcare got an AGM. Harvey Norman got an AGM, so maybe you'll get some trading updates or some comments about how the businesses are tracking. Globally, pretty quiet, to be honest, on the corporate front. After the last few weeks, we had a very busy period. Then last week it quietened down, but you had the biggest stock in the world reporting its result in Nvidia. Nothing this week that is anywhere near that important. You've got a couple of releases, Best Buy, CrowdStrike, a few others, but nothing super high profile. So I think this week it will really, for us at least, be all about the Reserve Bank and what we see in terms of the OCR, and almost more importantly, because we're all pretty sure it's going to be a 50 basis point cut, more importantly, what do those projections look like and what do we hear in terms of the commentary in the press conference from Adrian Orr. Right, thank you for listening. We'll talk again soon. Enjoy your week.
For more insights, visit craigsip.com.